Good afternoon, tackle traders, and happy new year to you. This is Frank coming to you with the market recap for the first trading day of 2019. And good afternoon, Scott. While it started out maybe interesting, it really was a pretty dull day for the most part. We gapped down early, on the open, of course, fought back nicely for an hour or two, and then really kind of just flatlined throughout much of the second half of the trading day. So not a bad way to start the year out. Some interesting things developing on the intraday. Maybe, I guess it depends on your idea of interesting. I'll share mine with you here before too long. Just a quick note, we're not going to be doing many earnings this week. Next week, I want to say there were 4 S&P companies next week, if I've got my count right. And good afternoon, Patricia and Blake. As always, good to see you guys. Hopefully you're ready to get out of the holiday routine and back to work. I'm so happy. It'll take me a day or two probably to get really back into the swing of things. But I'm happy to get back on a little more of a regimented schedule. If you will. But we will be wanting to make sure that with all of the trades that we're looking to set up in the days to come, just go in, double check those earnings calendars. Next week, just a few. I believe it's 4. But then the following week, that's when it's really going to hit. And so there's going to be plenty of earnings that are going to potentially impact our trades. Whatever your rules are, whether you close before earnings or are willing to hold through earnings, maybe it's an earnings specific trade, whatever it might be, you always want to be aware, right? You want to know that earnings announcement's coming up. If you choose to sit through it, that's your choice. You've done your work, you've got your risk set up the right way. If you're a wimp like me, to get out a few days before the announcement. Wherever you stand, just make sure you do get double check. I'm always worried about that because I've seen it. We probably all have been on the wrong end of a earnings on the open. Not a great way to start your morning. But taking a look at our broad markets, I'm excited for the earnings season. I honestly am. I really like earnings season. I used to hate it, but I'm getting more and more interested in it. Maybe it's just, I don't know what it is, but we've got a few weeks until we can really dive into that. So taking a look at today's price action, you really saw quite a bit of strength early. I mean, we really sold off, as you guys know, overnight in the overnight market, but on the cash open, we really just kind of started moving up almost immediately, showing a lot of strength. Early in the trading day here on the 15-minute time frame. We're going to zoom into an hour here really quick, and all of our indexes are going to be very similar to this. We had that nice first half of the day, and then basically we just flatlined, the second half of the day, as really nobody, present company included, speaking for myself at least, nobody was quite knew what to do with it. I certainly wasn't ready to run off buying the market or anything like that. But so many of the bearish retracements that I'm following, I'm sure you guys have seen the exact same thing, have yet to be confirmed for potential entries. Now, one thing that I think is interesting, and you'll see this in the S&P, the NASDAQ, and the Dow Jones right now, with where we gapped on the open this morning, we've actually established a little bit of a short-term, upward trend line on our major indexes. Here's the S&P, here's the NASDAQ, here is the Dow Jones. So all of these have now created those higher lows, and they've already kind of established those higher highs on those shorter term timeframes, of course. From a bullish point of view, as long as that holds, well, we're going to keep rising up, right? If that trend line continues to maintain, we'll keep working our way up in price. If that trend line breaks, that is going to be the first, in my opinion at least, sell signal to potentially enter into bearish positions. Not necessarily enough to jump, get you all in. That would probably be up to you, of course, and your individual rules. But taking out that trend, I mean, this is, we kind of think about how this stuff develops. We go from being in a downward trend to all of a sudden we're in an upward trend on these shorter term timeframes. Now we're in a consolidation for a lot of candles over on the S&P. So if you think about how that price action develops, on the shorter term, which then drags into longer term timeframes, this is kind of how it starts, right? You always have to start somewhere. So while that may or may not be an area where it would be enough to go short for everybody, I do think that can kind of be an area that's going to kind of put us below today's low a little bit if we're a little more conservative, to start to see some of those bearish signals if that's the way this is going to play out. And if we're going to continue to run, and honestly, I wouldn't mind seeing that for a few more days, as a potential retracement that develops, that's okay too. That trend can kind of be that first line of defense for the bulls right now. I did think it was very interesting that that's how we played to start the new year off. So really very similar situation in the S&P. We still have a little ways to go before we're going to test that major support level, at least in my mind, that major support level. NASDAQ, we're right there. We kind of smashed our head into that area here today. Same type of a pattern has developed over there. Keep an eye on that. But again, a little more of a rally would not make, some of us unhappy. Better risk to reward when we finally get those sell signals. I don't know if the sell signals are going to work out, but I do know I want the best risk to reward possible when they develop. I go call me crazy. Same deal with the Dow. We're kind of right back up into these old support levels. So we got a little room in the S&P, but we're kind of fighting with those old support zones on the NASDAQ and the Dow Jones right now. Should be interesting to see where we go. Tough day to really make heads or tails out of the market. Really, it's, is it going to, is this the end of this little rally? Makes sense price-wise if we start to sell off from here, but we haven't really seen any of those sell signals develop just yet. As a matter of fact, while it's just one thing, for those of you who follow moving averages, and Happy New Year to you as well, Abel. Great to see you as always. We caught the 9 in a lot of areas. Our indexes caught the 9, as Coach Mark calls it. I certainly use the 9. It's not I'm not quite as crazy about the 9 as Mark. As Coach Mark is, but I definitely was with Mark when we did a lot of back testing and work on that. So I certainly pay attention to it, and we did catch it. We've seen a lot of areas catch that. Again, is that much? Well, it's something, right? It could have acted as resistance, right? So keep an eye on this, how we develop in the next couple of trading days. But yeah, you're right, Abel. It seems, it was basically, we kind of were talking about that before you hopped in. We kind of had a bullish run early off of the gap down, and then really the last half of the trading day just kind of hung out and did nothing. And so it was such a boring afternoon for sure. Now, over on the Russell, we're looking a little different. I mean, we have similar situations developing where we're kind of developing that intraday upward trend. Over in the Russell, of course, it's a lot more beat up than our other indexes. We were able to close above 1350 today, and while that's maybe not a huge deal technically, it certainly is maybe a psychological number. A lot of times Russell will kind of work with those numbers, as a lot of things will. So we're continuing that retracement. This looks like the nicest retracement. If I'm just thinking about the indexes, to me right now, the Russell looks like the best place for that bearish retracement with just the way the last few trading days have developed personally. But we'll have to see where we go in the next couple of days. That can always change. But really happy, when it gapped down on the open this morning, I was thinking, oh, it's going to take out all of the opportunities, all those bearish retracements that I looked for this past weekend and have been keeping an eye on. I'm not going to be able to get into them because of the gap down. So I was really happy to see that rally today from a selfish point of view. So as we move into our sectors, very similar type of situations. Did have a decent day over in the materials sector. Again, we gapped down across the board and rallied up. And most areas were able to rally up somewhat reasonably. Utilities, real estate did not join the party, as we'll see. But really not a lot has changed. We're kind of still hanging out at that old support level, which again, as we know, is kind of hanging around an old zone. Not a specific number, but an old resistance zone. So really not a lot has changed. But again, we're able to close above the 9 here for a second day now over there. Energy really strong here today as it works back into, its kind of next real, in my opinion at least, next real challenge. It was able to fill up that space once it kind of got going up without testing any, really any major levels of resistance. We're at a test now, in my opinion. Certainly we're not. It's going to be one of those days. Tomorrow, I don't really see a lot of bearish, entry points developing. Maybe breakdowns, something's already breaking support, but on these retracements, for my rules at least, I can't really see any scenarios where tomorrow is the day. So if it wants to rally up, great, because I'm not going to probably be there anyway. But we did kind of run into that area. Again, we have lots of overhead we break this one, and that would be tough. It certainly would be. I'd have to give it respect if it did that. There's something right around the corner to wait, waiting patiently for it. Financials, another one of our areas that rallied fairly nicely, up nearly 1%, 0.84 here today. Chart looks very, very similar. We're we're at that old support level, which and resistance level. So not a major price point, but certainly a price point, a general area where we definitely have seen some serious price action, both from the bullish and the bearish side in days gone by. So, and again, not there yet. And again, if you're working in, there's a bullish point of view, there are bullish setups. There's not many of them, at least in my mind, but I've seen them. I'm sure you guys have too. This is, an okay development, right? It's okay to be, working into strong, upward moving charts during this phase of the market, whether this is just a short-term rally or maybe the bottom. Either way, if we're trading into strength on the upside coming into it, well, we're happy with that, right? But do keep in mind we are kind of going against the longer term trend when we do that. Of course, you guys do not need me to remind you of that. As you look at industrials, one of the areas that I do think you can say cleanly and clearly took out an old support and resistance zone is the industrial sector. And as we talked last week, for whatever it's worth, this was the area that I was quote unquote most bullish on. I take that with a grain of salt, but it was the only area that I was even moderately comfortable with. And as we talked last week, it was really simply because of that long-term trend line. So seeing this upward movement off of this isn't terribly surprising. Like I said last week, and in hindsight, I regret these words. I didn't trust it as a buyer, but I definitely respected it. I wish I would have trusted it as a buyer, but I do think as we kind of look at where we are right now, we've cleanly taken out a level of resistance that was pretty easy to identify, I think, for most traders. Don't have a lot of ups of things in our way until we work into that 66 range. We do want to keep in mind it's still a bearish retracement, right? But there is a little bit more room for those of you who maybe were playing off of that bounce of that longer term trend line. Very interesting to see that happen. And that's, everything's kind of went up, but they made the most sense to me, at least. Technology, we're kind of right there at that old support level, kind of banging our head. Again, big gap down on the open. Didn't really, nothing impressive, closed pretty flat on the day, but we did fight back. And so much like the rest of the market, not a lot has changed, in my opinion, from a technical point of view. If this was a red candle, if we'd closed red down here, this would look like a really good technical setup to me, but we didn't. And that's okay. That's okay by my standards, at least. Well, we can wait another day or two. And good afternoon, Shirley. Great to see you, and I hope you had a happy holidays and an awesome new year and are ready to get back into the swing of things. Even though we just did the market recap Friday, when we started last week, it didn't seem like I'd been away very long, but this time around, maybe it's because I did more during this past weekend than the Christmas weekend, but it seems like we've not done this for weeks. So, but it's only been a few days still. Over in staples, again, I think you could make a case that we've actually, triggered into downward movement in the staples sector, a little bit different in my mind, at least, from the other areas in the market. We certainly we hit that top here, of course, on Friday, and worked our way down. We've put in lower highs and lower lows. We've closed green the last couple of today and Monday, but we've seen that downward movement. So I think you could say as long as we're below 51, we can be looking at this from a bearish entry perspective, not maybe specifically the ETF, but I do think, as opposed to the other areas, that I don't really think you could make much of a case that they have set up entry points, whether you're more aggressive or more conservative. So, there's definitely some interesting things going on in the staples sector, and in my mind, at least for the short term, definitely an area that I like a lot as a bear. That can and probably will change as we kind of continue going forward. But I think when you just evaluate this chart versus any of the other sector charts really that we've looked at from a movement point of view, these guys are showing the most weakness. Now, we've got a few others that are going to take that crown from them really quick. Hi, Andy. How are you, my friend? Good to see you. Such as utilities. Utilities, again, We hit that high point on Friday. We put in a lower high and a lower low on Monday, carried that on today, down almost 2% over in the utility sector here today. We do have some serious support. It's still kind of a rocky chart when you think about it on an ETF level. They do have a lot of history. And while we did breach that support level a couple of weeks ago on the intraday, we did rally up on the intraday, closing above that. This is a pretty, in my mind, significant level of support. So, if I'm in a bearish situation in the utility sector, I'm going to be keeping an awfully close eye on that support level. If I'm not, if that breaks, that's probably going to open up opportunities for more, bearish entry points. And hey, if it holds and we rally up, well, now we know where resistance is, right? So if you're thinking about, well, I like utilities, well, we needed this resistance to form. Okay, well, now we know if it goes above resistance, then we've either, made a higher low and thus a higher high, or we double bottomed and made a W. Now, again, we're projecting there that may or may not happen, but we need that resistance level to form, really whatever side we're on, right? Whether we're looking at it from a bearish or a bullish perspective, because now we know where price reacts. But a real rough day over there in the utility sector here today. Healthcare, a volatile day, did not really do anything. So, after they closed down quite a bit on the day, but they really didn't do anything like so many of the other areas in the market. They really just kind of continued to just hang out. They didn't catch up with hey, let's, rally early and then take the rest of the day off. Really kind of stuck between, two, fairly important levels of resistance and old support right now. But again, I think you could argue that this is a confirmation candle. If we see more downward movement going into tomorrow, I think you could argue you could be bearish, get into bearish positions in this healthcare sector, because we've actually seen that downward movement. Again, a lot of indecision here today, so not the greatest looking candle. Maybe if I'm looking to go bearish tomorrow, but from a price action and where we are versus where we were, I definitely think we've seen at least that first step in this. So a few areas are a little bit closer to maybe quote unquote ready. For bearish retracements than others, at least, per my trading rules. You don't, of course, have to agree with me ever or on anything in particular. Good day for the discretionary. We've kind of ran our way. We had a really nice rally. We've had a nice market rally for sure, but at least it seems like we've really felt it over in the discretionary sector. Some of those stocks were so beat up, and some of them had just recently, had gap downs on earnings and things like that. We've had a pretty good rally. We're working into 100 on the ETF. This, of course, is an old support level to be keeping an eye on. Obviously, unlike, utilities or healthcare, which at least you can argue that maybe, we could move in as early as tomorrow from a bearish point of view. I don't think you can make the same, even argument over in the discretionary right now. Nice strong candle here today, working into resistance. So I certainly don't know that this is a good buy signal, but I wouldn't count on, trust that to be a buy signal. I do think this probably going to be one of those areas that are going to have the best risk to rewards if we, late in the week get those retracement setups developed, just because of how much we've seen stocks in this area appreciate during this nice little run. But definitely got to respect how they move today. It doesn't really mean a lot to me because I'm certainly just looking at it from a bearish retracement perspective right now. But I'll keep that in mind. If they do, start that retracement and put in that higher low and take another run at resistance, I'll remember the strength that they were showing early, and potentially in that scenario, potentially a turnaround, at least short term. Over in real estate, again, real rough day there, the real estate. This one, I think, an area that was maybe the easiest to trade today from a bearish point of view, simply just based on the price action on the ETF. We kind of ran up into an old level. We had to wonder about this support level, but we took that out early. And really, we don't have anything until we get to this next support zone. Down here, clearly a lot of selling, down well over 2% here today on the ETF. Utilities, real estate, not looking all that great. Staples, not all that great. So the defensives, certainly not really taking part of today's bounce back off of the open. Pretty bearish looking over, in my opinion, at least, in the real estate sector. So we definitely have some things shaping up as we kind of get later in the week, and maybe, again, depending on your rules and all of that stuff, maybe as early as tomorrow in a couple of these areas that have already shown that change of trend on the intraday. So it should be fun going into the next couple of trading days. Lastly, over in the communication services, nice kind of going with the rest of the market. Really didn't do anything to change us on a technical level, in my opinion, at least. Did fight back nicely off of that open like some of our other areas, but really not a lot has changed. I think, just thinking out loud, I think this is where we want it to challenge. Come back into here. Let's challenge this old support level. Still to this day, this communication services ETF has never broke resistance. At least swing resistance, obviously, so broke intraday resistance, but never broke a swing level of resistance. Definitely an area that I'll be watching very carefully as late week, early next week for those retracement opportunities. So depending on, of course, your outlook on things, I don't think you mind the way that today played out. That really hasn't taken out a lot of the bearish retracement setups that I was following. They just, most of them have yet to had an opportunity to give any confirmation, which is fine. I can be patient. It's when it gapped this morning, if we would have gapped and ran that, then I would have been complaining, like natural gas. I don't know about you guys, but of course, this is the second time, natural gas has done this to us. Way back in, back in better times in natural gas, we went in, we were on a nice little run, went into a nice consolidation pattern, had a pretty easily to identify breakout opportunity, and then gapped up on the open. And while it doesn't seem like a big gap, those of you who trade natural gas know how big of a gap that was, right? That was a big gap on natural gas. And then we basically, when we last spoke, we were hanging right at that old support level, as kind of the next line. And for the first time in a while, a pretty clear situation had developed. We were going to bounce off of this, creating an opportunity for potential bulls, or we were going to break below it and look to fill up that space, and we broke below it. Unfortunately, we gapped below that, and the rest is history. And so, certainly not a bad thing, just a thing. Always interesting how these prices play these roles, time and time again. Looking at today's action, we kind of rallied right back up. As you can kind of see, we'll kind of break it down into an intraday level as well. We kind of ran right back up into that old area of resistance. And that was kind of our intraday high. And we kind of dipped off of that. I think you really, have to be looking at it from a bearish only perspective right now. And again, I still think that this is a tough, place. It's not a very consistent trend. It's not well behaved. I mean, in hindsight, everything's easy, right? You just went short on natural gas a couple of weeks ago and call it good. But that's easy. I'm perfect in hindsight. Tough area to trade, maybe as a swing perspective. But on an intraday level, we're kind of developing that nice, taking a look at an hourly chart here, a nice little clear intraday floor and, an intraday ceiling too, for that matter. If we're going to see a little more downward movement, and just the way that today's candle, of course, the overall price movement as of late would suggest, is probably the way to go. There's really not a lot here. Again, we've kind of worked ourselves back into a range where something may develop between here and this support level, but there's really not a lot of support, within this range. We went pretty sideways during this stretch too. So this old level acting as resistance, see a little more downward movement. Just thinking about where it's likely to head, at least as of right now, I can't see why anyone would buy it till we work back to this support level, right? Or at least until we start breaking some things. It's going to have to break lots of things. So it should be interesting, but keep an eye on that little floor. Obviously, that's more of an, day trading, type of thing. Maybe I still think this is not the best place to be looking as a swing trader. There's just easier areas, in my opinion. At least. We usually don't start with natural gas, but that's where we went because, I remembered that happening on the break to the up and now on the break to the downside. So over in the VIX, we continue to work our way down. Now, I don't believe that volatility is gone. Maybe I'm wrong, and that's okay. I wouldn't, be terribly unhappy if the volatility, normalized a little bit. But we are seeing the VIX, come off of those highs. So for whatever it's worth, to you, we are seeing a little bit of maybe, stabilization. But again, one thing that we want to keep in mind is all of this has been happening during the bullish rally, right? We've not had those great opportunities technically to sell, broadly speaking. Let's see what happens when we get those, right? Whether we're looking at the VIX or talking about the indexes or the individual stock in general, that's where we'll see where people's heads are at, right? It's easy. We saw those trends in the market. All of our market trends are in upward trends on short-term timeframes. it's easy when we don't have to think about selling, right? Maybe not specifically us, but market participants. Hey, just run up trend and make our life easy. Over in the metals, we are continuing to see some good solid movement over there. We were able to push through, I guess that was Friday that we pushed through that 1280. Had quite a bit of back and forth today, as really we don't have a lot above us until that 13, which is going to kind of line up with some old support, some old resistance, and a nice round number, right? So I think 13 is the area for me, at least. I'm watching. Really, not a lot has changed over in the metals department, in my mind, at least. We've taken out that challenge, and so even if we pull back from here, I'm still going to be looking at it through bullish eyes. Because we've won, right? And we don't really have a major challenge, in my opinion, at least, until we get into 13, which of course is something we're going to want to keep a fairly close eye on. Not to say that I'm going to go bearish at 13, because I'm not, at least with the way the chart looks today, I wouldn't, but should be an area we want to keep an eye on. Same thing with silver. Silver kind of ran right up into this old, and this was a pretty significant, so we're looking at some serious bottoms here on silver, right, as we look at last year. Kind of ran into that here today. It whomped us pretty good. And that was probably a pretty easy one to call, just because of how much history there was. Again, were folks going bearish? I know I certainly was, and I don't know anybody personally who was. But that was a pretty, major price point for silver last year. And so what a better place to take some profits, right? Especially as the dollar was rallying here today. Keep an eye on that price. Nice thing about that, and again, kind of like gold, this is a more of a profit-taking zone, a place to maybe convert that call into a bull call or a time spread, or if I have shares in SLV, roll into a covered call, take profits, whatever that might mean to you. I don't think this is a bearish signal by any means, but I do think we want to respect this as a challenge level. Nice thing is, much like gold, if we can break through this, really not anything in the way till 16. And so I expect that as we end January, we hit 16 in silver personally, and until we break some support, I'll continue to fill that way. So a pretty interesting day over there. Love it when things make sense. Run up to a major level of old support and people take profits. I love when that happens. Over in crude, lastly, a lot of volatility back and forth there today on crude. We did briefly, run up all the way into, did it hit for 48? I know it got close. Yeah, actually, no, just a hair below it. But really, not a lot has changed, really from anything. The 50 is still probably the most exciting to me price for it to get to test as a potential bearish opportunity. We have seen this happen, and we weren't together these last on Monday. We've seen this little intraday floor develop, right? If we go into an hourly chart, we've seen an intraday floor pretty cleanly develop. And if you kind of think about again, space, again, we're a ways away from there right now, right? But if this support were to break, there's really nothing until all the way down here. So, again, my issue with that really is risk to reward more than my expectations. I expect if we break that support, we do test 43 again personally. My problem with trading that, at least directionally, is the risk to reward is going to be awfully tight. And that's not what I want. I want it to run into 50 or at least closer to 50 and get our signals from that at that point in time, because the risk reward will be there. The outcome, it'll be whatever it is, right? I'll have my preference for sure, but it's going to do whatever it's going to do. I want that risk to reward to be there. But keep an eye on that intraday floor. Again, we may not test it, at all, right? This might be the bottom for all we know, but it certainly has developed into a fairly important, from a short-term perspective, level of support. Really not any great reason not to work up into that falling 20-day moving average, which is just shy of that $50 mark. So, I don't think it's unreasonable, to think that maybe we are going to get, the test of approximately 50 in the days to come. So that's what I'm pulling for, at least. I think that's going to be the best technical opportunity for us as traders. We'll see if we get that or not. So, not a bad way to start the year out. Nothing really changed. Things behaved pretty nicely. Whether you're, looking for, some relief on the bullish side, well, hey, we gapped down and the bulls bought in, right? They didn't really run away with the day, but I wasn't buying off of that gap. I was convinced all of those bear setups I've been looking at were gone, and I was going to go look for some new ones. So I certainly wasn't a buyer, but that doesn't mean that clearly some people were buying off of that. So if you're looking at it from a bullish perspective, we saw that not all hope is lost, right? There's still some people out there willing to buy. If you're looking at it from a bearish perspective, well, again, you're probably like me. You didn't love the idea of it gapping down so much and having a big day of selling, taking away what could have been potentially great bearish retracement candidates that you spent the last weekend looking for. So, not a bad way to start the first day of the new year. So, ladies and gentlemen, it wasn't the most exciting day, but that's okay. There's an exciting day not too far away. We know this market, right? Might be tomorrow. So, Abel asks about CVE. Let's go take a quick look here, Abel. And a little bit of a head and shoulder on an intraday. Okay, so you're looking at an hourly time frame, 15-minute time frame. Yeah, there you go. I see what you're looking at. So Abel's got this little. So I'm not sure if you're looking at this one, right? Whoa, yep, there's me drawing very straight lines again, Abel. Are you looking at this one here, or are you looking at this one here that we just broke out through here? So we'll go into a shorter time frame. So we did have that little bit of an intraday reversal, on that head and shoulder. So I could see what you're looking at there, whichever time frame or line you were looking at there. Abel, on that side of things. So I'm guessing this is where you're at right here, Abel. Here was our left shoulder blade. So again, you could argue that it was right through here, or we're approaching that top end here. Is that what you're kind of thinking about? The 740 range. I know I'm a little bit ahead of you on the chat, so I'll give you just a second there, Abel. So, but I'm guessing you're probably looking at it coming off of that 740. That kind of be that price point. So yeah, I mean, I definitely see where your head's at. If we look at this on a short term, on an intraday basis, again, much like the market, and this is the thing that you're going to see things that look a lot like this, Abel, until you stop seeing them. And while this isn't quite as perfect as our intraday trend lines on the S&P and things like that, the same thing is true, where we've made these higher lows and these higher highs. So this trend line is not going to look all that great, right? We kind of gap below that here today. But if you think about the actual building of the trend, higher low, run up, higher low. And so we're going to see a lot of this probably across, many different sectors, many different areas. I would be, of course, looking to the longer term time frame for that. Because when I look at these guys on a daily chart, I look at them and say, goodness gracious, this really, if we get some sell signals, I could get behind it. We're testing, a fairly respectable old level of support zone with these guys. And I don't know a lot about them specifically, but they do look a lot like they're still in a downward trend and still at some challenge areas. But yeah, I would agree. You are seeing that intraday head and shoulders develop there. Price-wise, it's starting to make sense that this is where they would slow down as we kind of think about it. On an intraday level, we saw all that history there, and of course, just on the daily level. So I could definitely see what you like about these guys for sure. And then, sand oil. Okay, so yeah, there's lots of really interesting charts in the energy sector, depending on what you're looking for. And then X links here, real quick. XLNX, right? That's X links. I think that's how you say their name. So, and they've actually held up a little bit better than certain other areas for sure. Shirley, this was Shirley's. Yeah. So are you doing anything with these guys, Shirley? Is this something you're watching or something you have a trade on? What are you doing with these guys? Yeah, I would agree, Abel. I could definitely see. I mean, we need to see those signals just like everything. And again, if we just look at the ETF for energy or so many, Chevron, Exxon, whoever you want to look at, while they might not have that same nice looking head and shoulders on the intraday that you've identified there, the same general type of patterns develop. So I'm with you overall within that area for sure. But taking a look here at X-Links here, gotta like where they're at, really from a buy side, or at least from a neutral side mechanic, I think, surely. There's a lot more bearish opportunities. Now, you could maybe make the case that, we've kind of worked our way back up to this old, support level and as a potential, reversal point here. And so you're looking at it from a long point of view. I wouldn't be, I mean, again, I don't think it's great, but I do think it's a lot better than a lot of things that I've seen, surely, from a buy side. From a buy side of things, I'd want to make sure we kind of broke back above here. and maybe even more ideally, I'd like to see it kind of pull back a little bit and then take another run above 88, if that makes sense. So, make this do what I want it to do. Maybe it drifts down, Thursday and Friday, maybe down into 85. And then, Monday and Tuesday starts working its way back up and then through 88, kind of continuing on that trend. Because I agree with you overall. I do think that this is a better buy candidate than a sell candidate. Personally, Shirley, I would agree with your analysis there for sure. I do think that you want to keep a close eye on that 88. We've got a lot of history there before. And one thing we want to kind of keep in mind, if we go back in time, a month or whatever, we have this breakout, we pull back, we create that higher low, we come back and test it, and then we broke through it. And so the one thing that we want to keep in mind is this side of things, right? We've just we basically made, whether we agree or disagree with it, a series of lower highs and lower lows, right? In the shorter term. And so if we just look at this chart right here, we're probably not thinking about a buy, right? If this is the only information that we had to work with. Obviously it's not, but we do want to respect that side of things. That's why I think breaking 88 is a much better signal. And again, I have my preference. I'd like to see it consolidate or pull back a little bit, take another run if I'm looking at a chart like this personally. But I don't disagree with your overall evaluation of it, Shirley, by any means. Certainly held up a lot better than most things in the market. And most things in its sector, I'm sure, as well. So a real interesting one. But yeah, I could see why you like it. I really could. If we can take out, approximately 88, get back on the right side of that, I could see, I wouldn't be opposed to looking at it from a bullish point of view at all, personally. I would want to make sure we kind of take out this first, because I do think that this is here, whether we believe in it or not, if that makes sense. I want to make sure we get out of it. But the great thing is if we close above 88 or can take out 88 per your own rules, well, at least those concerns would be alleviated, right? Maybe there's other concerns, maybe we've overlooked them, but that particular concern, at least for me, would be, I'd feel a lot better about that. So hopefully that gives you some ideas. And thank you for sharing, Shirley. It's always nice to have, some bullish candidates, or at least things to keep an eye on from a bullish point of view. And when you're, in an overall bearish market, I'm sure you guys were just like me as you were going through your watch list and scans this past weekend. Lot of fantastic bear retracements, not a ton of great bull candidates. So always appreciate that. One last thing, and I'll let you guys get out of here. Thank you, Shirley. Thank you for sharing. Always like to look at that. Yeah, a real interesting development on the weekly chart. And I thought we were going to see something like this. It looks kind of like a pullback, right? Just kind of looks like a bullish pullback. If we look at it on the weekly chart, we pulled back into that weekly 20-day moving average, have seen some upward movement here this week. Again, we still have a couple of days, so anything could happen, right? 88 could push us down for sure. But as we're at, if we're just looking at where we are currently, looks a lot like a bullish retracement on the weekly time frame. So yeah, real interesting chart for sure. Thank you for sharing. As always, guys, it's certainly my pleasure. Great to be back with you, and Happy New Year to each and every one of you. That'll do it for today's market recap, but always a pleasure, always a lot of fun, and we'll pick up same time and channel next week. So if you're new around here, be sure to hit that subscribe button and that notification bell so you can join us on any of our new videos or live streams. And don't forget to follow us over at Tackle Trading on Twitter as well. For our pro members out there, get in there and check out the new Tackle 25. I don't know, it's awesome. You guys are going to love it. It rocks and it rolls. It's ready to go. So go check that out. It should be a lot of fun. Really good candidates for, like Coach Matt said, not just for covered calls. A lot of credit spread trades can develop over the course of the next year from that list as well. We're all really excited about it. I'm sure you guys are as well. So, and of course, if you guys enjoyed the market recap, it is always helpful and appreciated if you do give it a thumbs up, just to let us know that we're on the right track around here. So thank you guys so much. Always a pleasure. Appreciate everybody's time. With that, ladies and gentlemen, get the heck out of here. Happy trading. I'll see you tomorrow.